Let's talk mortgage rates. Are they going up or are they going down? Hi everyone, it's Mortgage Matt Famiglietti here from Envoy Mortgage in the Bedford, New Hampshire office today, talking about the hot topic of conversation, mortgage rates. What is my mortgage rate? Let's talk about it. With so much still uncertain and market movements remaining very, very unpredictable, it is a losing game to try and predict and forecast where rates are headed next. The increase in mortgage rates is to help manage the skyrocketing number of refi applications that we saw due to just 2 weeks ago, we hit record all-time lows of mortgage rates on the 30-year conventional fixed mortgage rate. It was at 3.29%. As of 3/19, according to the mortgage reports, we were at 4.75%. Substantial increase in rates. The volatility is nuts right now. The coronavirus, the uncertainty in the world is driving the economy nuts. We don't know what's going on. The stocks markets are going up and down. It's just bananas. It's safe to say that more dramatic movements are on the horizon for mortgage rates, for the better or the worse. What I kind of want to do is show you. I got a 3-year, right? Here is a 3-year up and down scope of mortgage rates. And then we have a 1972 to current, okay? And then I'm also going to show you right here. Let me get this. Okay, so I'm going to come over here. Let me flip this back. So I'm going to show you this. So we're going to go this way. As you can see, there's a lot of red on that screen right now, but it is unchanged since this morning. But if I go like this, something to look at every day, let's look at the 1 week. This is the 1 week of market volatility. Okay. Then we can look at 1 month. If I hit the right one. It's 1 month. So the higher you see that number, like this right here, rates are good. Rates are good. The lower it comes, the worse rates are getting. So as you can see at the moment, we're headed up. Rates are ticking up. Let's go like this. This is coming back to me now. Super interesting operation we're running here. Boom. All right. So that's called forecast, or not forecast. That's called looking at the mortgage rates and just trying to best gauge what's happening. Super unpredictable still. The last 3 years of mortgage rates. 2017 average in the 30-year Fannie Mae fixed at 4.3. 2018 at 4.94. 2019 at 4.20. As of 3/16, I got a note here, it was at 4.12. Rates in the 4s to 5s are historically low rates, folks. And when I say that, this is proof in the pudding. This is 1972 to current mortgage rates. We want to talk about high rates? 1972, average 30-year Fannie Mae fixed at 7.46%. In 1980, let's show you. See that? 15% mark? Where is it? 15%? Higher. 18% plus interest rate in 1980. Right? 1988 at 10.5%. 1996 at 8.39%. 2004, 6.3%. 2012, just after we came out of that 2009 crisis, the market came back really strong. 3.98 average 30-year fixed coupon for the Fannie Mae fixed note. Now in 2020, we're seeing the most volatility I think we've ever seen on a day-to-day basis. So in a nutshell, to wrap up mortgage rates, hot topic of conversation, the rate you get quoted with your application very well may be substantially different for the better or the worse by the time you go under contract in a home. Whether you put your application in today and you put an offer on a home over the weekend, over next week, whether you get your application today and you don't go under contract on for 2 months, your interest rate fluctuates on a daily basis based on the market conditions and the mortgage-backed securities that are going to determine the mortgage rate. I hope this gave you great value and some mortgage rate topic of discussion. And if you have any questions, please feel free to reach out to me, and I'll do the best I can to talk to you about the mortgage rate. Just remember, we are in unprecedented times, uncharted times. There's a lot of uncertainty in the market right now. Trying to forecast and predict where the mortgage rate is going is a losing game, and it's doing a disservice. What we can do is say this: rates still between 4 to 5%, even above 5%, are still historically low. It's not the 3%, 3.25% someone got quoted 2 weeks ago, but even today at the 4% to 5% plus range even, it's still historically low. And what it's going to do is, if you were to refinance into that lower note right now, or purchase with that interest rate at 4.75 or 5.25, and the rates dropped, we're going to look to refinance you if it makes a net tangible benefit sense. The best thing that we can do right now is, if you are thinking about refinancing your mortgage and you get your application in right now and the interest rate doesn't line up with your current file, we can't refinance you right now, that's okay. All we're going to do is sit on that application in the pipeline. I'm going to monitor it on a daily, minute by minute, hourly basis. And when rates do come back down, if they do, and we hit that magic number we need for you to benefit for a refinance, at that point I'm going to pick up my phone and call you, let you know we have the opportunity now. If we want me to lock in, we're going to lock that rate and get you refinanced and save you some money. So again, hope that brought you some great value on refinancing, and let me know if you have any comments or questions. Thank you.